Hello and welcome to Capital Market Live from Channels Television. I'm Will Ebong. It's that time of the week where we assess and evaluate how your investments are coming along. First, let's kick off with the highlights of events at the NGX this week. That's the sound of the closing gong earlier this week, where the NGX resumed physical trading on the floor of the Nigerian Stock Exchange. Remember, the trading floor was closed for the buying and selling of stocks in 2020 in the wake of the COVID-19 pandemic. Our correspondent Anita was live at the closing gong ceremony, and he spoke to some of the stockbrokers who shared their experience. Take a listen.
What brokers stand to benefit from physical trading. Most of them will wish that in fact it had happened before now. Well, of course, we can't do away with technology. Technology made us to be able to trade virtually, still interact with one another. But this particular one, has a unique benefit to all dealers. You have a rare opportunity of exchanging ideas, with your colleagues on the trading floor. You have also a rare opportunity of consulting, asking information, getting, right information at the right time. Not the information you get when events have taken place. You get information at the right time and you act on those information. That you cannot get from virtual trading, but you can always get that from the floor. Of course, we also have a tea room where brokers converge and also exchange ideas. Also conduct their deals, because it gives you opportunity to do so many things. So this physical trading is an opportunity to bring everybody back to the fold, bring us back to the platform that we recognize that has always been the one promoting capital market as a whole.
When a company's information gets to our trading engine, of course, you will see people will digest it there immediately, the implication, and you as a young broker, you will learn from your senior colleague and take informed decisions. So you can see it's a win-win for everybody. However, those of our colleagues who are outside Lagos, yes, I'll still employ them. They can still be doing the virtual trading. The exchange, Nigerian Stock Exchange, as it used to be before, we even had a remote trading. Just that it was not that prominent. A lot of us still trade in the office, Then from time to time, you come to the floor to fraternize, and share ideas, share opinions and all that. You come to the floor for physical trading.
The issue of the return to the market offers, the natural habitat for brokers to continue to do what they know doing best and better, congregating and sharing in the kind of camaraderie that they normally would have. So whether or not there will be more public offerings or not is a matter of time.
Now joining me to review market activities is Professor Uche Uwaleke, Professor of Capital Markets, Nasarawa State University, and President, Association of Capital Market Academics of Nigeria. Many thanks for joining us, Prof.
Thanks so much, Will.
Prof, we just I'm sure you saw that clip right now where those brokers were talking about the experience of trading on the floor of the exchange. Is more like a bonding space for these traders. And now that it has been opened again for full physical trading, what difference will this make, since virtual trading has been going on smoothly before? Would it change anything?
I think the key takeaway from the interviews you had is that it is going to promote esprit de corps, among traders, among brokers. Perhaps what hasn't been said is that the floor serves as a veritable platform for even training of future brokers, future operators. I recall that when the Abuja floor used to be open, of course Abuja floor is still not open as we speak. I used to take my students to the floor on excursion visits. And of course, each time they go there, they get the opportunity to experience firsthand, those things you tell them, in the class. And usually at the end of each visit, one or two of them turns to you and says, "How do I become, a broker?" And I'm happy to note that a few of them have gone on to become brokers today, inspired by those visits. And I can also tell you that I qualified in 2007, as a broker after taking the exams of the 3 stages of the Chartered Institute of Stockbrokers. And in those days, after the examinations, you were required to be on the floor, train on the floor for a minimum of 6 weeks, okay, before the final exam you also do in Lagos. So the point I'm making is that it actually serves as a veritable platform for training. Those things are no more, in place now because the floor, has been shut. And that's why those of us in Abuja, this Abuja City gentlemen, are also wishing that the Abuja floor can, will be reopened. It is not for nothing that the New York Stock Exchange, for example, which we know is the biggest stock exchange in the world by market capitalization. Yes, NASDAQ by number of listings, but the New York Exchange by market capital is the biggest exchange in the world, and it is still operating, floor-based. Okay. And I also recall some time ago, I think in 2019, I went to the Korea Stock Exchange on a study tour. But we noticed, those of us that went at the time, that the exchange, there were no brokers on the floor. It was completely an electronic, trading floor. The point I'm making is that there are benefits, there are merits, of having the floor open. And that is why the New York Stock Exchange, up to today, is still, operating as a floor-based, stock exchange. And that explains why one of the officials of the exchange, put it this way, that the major benefit of having brokers come in, congregate on the floor, is that when they get there, they are able to see the market, they are able to hear the market, and they're able to feel the market. You don't get all of that when the floor is shut.
Prof, it's good that we can see, feel, and hear the market. I think the markets heard the opening, for full fiscal trading, because this is the first green close we've had in, I don't know, Prof, we've been having the red closes for the past couple of weeks now, or some weeks now, but right now we have this week, the market ended in the green, and this is despite the mixed, performance during the week. What would you say were the drivers for this week's performance on the equities market?
Well, of course, you know that the month of April closed in the red. So what we see now is some sort of bargain hunting is beginning to take place on the back of impressive first quarter results by some companies. Sure, you've seen results from BOA, for example, from GT, for example, and including corporate actions by companies too that are releasing their 12-month audited financial statements. I'm specifically referring to Zenith. Zenith announced a final dividend of 2.90 kobo, bringing total dividend to 3.20. And of course, that has helped to push up the price, the Zenith, to about 24 naira now. Favorable news, announcements have also helped to influence, share prices, during the week. So overall, I would say that the Q1 2023 results of some companies, that is what is majorly, driving performance, at the moment.
So, Prof, considering that the markets, performed mixed, what should investors expect for the coming weeks? Should we see more sustained bullish sentiments based on the bargain hunting you've mentioned, or will there be some market news or market movers and shakers like the $10 and the Elumelus that are going to be tussling for stocks? Are we going to expect more of that to come, Prof?
Now, I expect that the market will try to price in, anticipated announcements with respect to the inflation rate, and also in relation to the Monetary Policy Committee stance that will also happen much later in the month. My reading, my sense is that the MPC is going to leave the rates unchanged, and of course, inflation rate is also likely to continue to trend upwards. So these macro factors, domestic macro factors, are going to combine to shape the stock prices, in the coming weeks. Together with also what is happening from the external scene, we are beginning to see a lot of positives, emanating from the in the US, for example, where job numbers, are beginning to show or indicate that the US economy is not going to face recession. So recession fears are receding in the US, and the contagion fears are also receding, given the way regulators rose to the challenge of the banking crisis. So I think these positives will also influence performance in the market. And as long as the oil price continues to do well, because oil price performance influenced largely what we saw happen this week, particularly in Europe, where the energy, oil and gas sector, appreciated significantly. So I also think that will rub off positively on our markets. We've also seen it here. The CEPLAT, for example, corn oil, for example, also showing some strong performance. So that's on the back of favorable oil price that we've had so far. So I think going into next week, in the coming weeks, yes, markets will be mixed, but we are likely to have more bargain hunting than sell-offs. Because if you also look at it, sentiments are still positive. If you gauge sentiments in terms of market breadth, in terms of number of gainers and losers, we've had more gainers than losers, in the last few weeks, and I think that is likely to continue.
Looking at the sector performance, you mentioned the oil and gas, CEPLAT, corn oil. We see that the oil and gas index was up 5.08%. That really rubbed off. The gains you've mentioned in the oil markets has rubbed off on the banking sector. But still going outside our shores, just for a quick moment, Prof, we've seen the U.S. Fed voting on Wednesday to increase their interest rate by 25 basis points. How likely is this going to affect performance of the capital market here in Nigeria, seeing that when the rates are going high, that's higher cost for other countries that depend on the dollar?
Okay, you noticed, if you've been following very closely the U.S. market, you noticed that the market were down on Thursday. The Dow Jones, the S&P, the Nasdaq, they were all down on Thursday. I remember the U.S. Fed released that Jerome Powell announced 25%, 25 basis point increase in the policy rate. So on Thursday, the market, responded. But on Friday, we saw a rebound following again the release of the job report for the month of April, which I have just said here, has gone to show that, the recession fears in the U.S., may not crystallize. So I think that is positive for positive for our markets, because what that means is that the U.S. economy is not going to experience the kind of turbulence that the markets were initially, expecting. And there is also an indication that this may be the last the last rate hike that the U.S. Fed will also be having. If you go over to Europe, it's also the same story. The European Central Bank equally raised rates by 25, basis points. So the point I'm making is that if you take the overall economic picture in the U.S., if you also take into cognizance the contagion fears that used to be, and the way the regulators too have risen to the challenge, particularly the last one, the collapse of the First Republic Bank, that was quickly taken over by J.P. Morgan. So all of that, I think, engendered some confidence in the market, and that is also what we saw, particularly on Friday when the market, rebounded. So I also think that that will rub off positively, on our markets. I don't see any negative impact of that increase by the U.S. Fed, with respect to their Fed fund rate, which is their policy rate. Remember, I also said that in our own case in Nigeria, I am also expecting that by the time the MPC meets, much later this month, they're going to hold, the rates. They
we'll look forward to
also
that,
not increase it. As I said earlier on, the U.S. is pausing interest rate, and I also expect that in Nigeria, we should also pause monetary policy tightening for now.
Okay, Prof. We'll look forward to that decision from the central bank when they hold their MPC meeting next. But we'll just take a quick break now. Next, the conversation we're having will be from the Debt Management Office, which has been releasing details of the securitization of the 2022 trillion naira ways and means from the central bank. That conversation in a moment. Do stay with us. This is Capital Markets. Welcome back. This week, the National Assembly approved the restructuring of the 22.72 trillion naira ways and means that was borrowed by the federal government from the Central Bank of Nigeria. And this has now been official now. So the Central Bank is going to have that on the balance sheet. But we're going to be discussing the economics of this, the implications for the capital markets, and Professor Uche Waleke, Professor of Capital Market, Nasarawa State University, is still with me from our Abuja studio. Prof, it is also, we've seen the reports now that the National Assembly has approved the securitization of over 22 trillion naira ways and means. What is the implication of this for the capital market and the economy if this loan is securitized? We know that before we were expecting that it would be, we all thought it was going to be issued to the public. But now they're saying it's going to be issued to just the Central Bank of Nigeria. Please, could you tell us about the implications of this?
Okay, Wills, maybe I should start this way. In 2023 budget, if you check, you will see that the government budgeted 6.3 trillion naira by way of debt service, 6.3 trillion. And this amount includes the also cost of servicing CBN's ways and means. The government usually borrows from the central bank at MPR rate plus 3%. So MPR today is 18.5%. It means the interest rate currently on those ways and means will be 20.5%. But the restructuring, is now affording the government the opportunity to now service the debt at 9% and over a 40-year period. So it is going to bring about a breather, if you like, on the part of government, fiscal finances. And it's also an arrangement that has provided for a grace period, a moratorium on the principal, such that the principal and the interest will only be amortized over a 37-year period after the first 3 years. So I think it's an arrangement that will free up funds for government to at least apply to some other critical areas. Now, on the capital market, remember the initial fear was that this kind of security, when you securitize and you issue securities, securitization simply means you're converting the debt to tradable securities and you're issuing them to the public. Okay, So the fear then was that if pension funds, for example, would invest, institutional investors will invest, you end up crowding out the private sector. We have pension funds today in the region of 14 trillion. And this amount you're talking about is 22.7 trillion. We have been told it doesn't include the new 1 trillion that has just been approved. So by the time even if you put the entire pension funds there, as I said, you have succeeded in crowding out the private sector, and there will be little funds for the private sector to access. So that was the initial fear. But this arrangement has now said that the securities will not be issued to the public, but to the CBN. Okay, so and I've always argued that the CBN is best suited to absorb it, okay, in their balance sheet. The CBN can afford to wait for 40 years to collect their money. So it's good that it's the CBN that is taking the securities, and it's also good that the public, won't be involved, as I said, and it's also good that the debt eventually is now going to come into the national debt stock, records. So there will be transparency. Initially, if you are talking about Nigeria's debt stock, you talk about just 46 trillion, without including the 22.7. But now it will be included, and anytime you're reporting the national debt figure, you will now include CBN's ways and means, and that means that should also foster some sort of transparency. So I think it's positive for the economy, but I also think that we shouldn't get ourselves in this kind of situation, going forward. We should ensure that going forward, the CBN Act, I think it's Section 32, that has to do with the ways and means, advances to the government, ensuring that it doesn't exceed 5% of the previous year's actual revenue as stipulated. We should ensure that that is what is, that is what we stick to. Because ways and means, of course, we know fuels inflation. Part of why inflation rate today is as high as 22.04% is because of the ways and means. And as I said earlier on, we can't continue like this. But now that it has happened and we are trying to get a solution to it, I think the solution that is on the table at the moment is the one that is, is the best arrangement in my view.
Prof, I don't think some analysts share your views. Some are of the opinion that the securities remaining in the CBN's books introduces a moral hazard issue. What would you say to that?
Yes, moral hazard in the sense that tomorrow another possibly the CBN management could also give out those ways and means in breach of the provisions of the CBN Act, in the hope that tomorrow too that will be restructured. That's the moral hazard thing you're talking about. But I'm saying that we can put in place measures to ensure that doesn't happen again. And number one thing we need to do is for the National Assembly to look at that act again. If you look at the act, the provisions don't talk about the conditions under which the central bank can go beyond the limit. Okay, and it also doesn't specify sanctions. So it is for us to go and see how we can amend the act and put in place all these things, measures, safeguards to ensure that even the CBN cannot do that without recourse to the National Assembly, for example. So if there are emergencies, as we saw in the case of COVID, if there is recession, as we saw in 2016 and 2020, the only way the central bank can go beyond the limit of 5% is by falling back to the National Assembly. So I've always made this case that debt limits, generally in this country, should be the responsibility of the Fiscal Responsibility Commission and even the National Assembly, and not by the DMO, which we know is just part of the executive arm of government.
So do you see the next administration consciously, embarking on a fiscal consolidation, Prof?
Yeah, Will, I didn't get that.
I was wondering, as in, you see the next administration, when they come in, talking about this debt we have now, embarking on a fiscal consolidation of this old debt that we have in the country?
Yes, that's when you talk of fiscal consolidation, that is a step, one step in the right direction. As I've said, the only way you can have some breather is to spread this CBN ways and means. In fact, before now, I had argued that the CBN can even write off, part of this, should even write off part of this debt. As we find in, some other climes, it won't be the first time if it happens. The central bank can write off debts owed it by the government.
Okay.
So that was my view. But this arrangement too is quite close to it, where the CBN also takes up all the those securities and then gradually receives the payments over a long period of time.
Thank you so much, Professor Uche Walike, Professor of Capital Markets, Nasarawa State University. We always appreciate your insights on the program.
Thank you, Will. My pleasure.
And that's a wrap on Capital Market. Do join us same time next week for another edition. And don't forget, you can watch this again on our channel's television YouTube page. Follow us on our other social media platforms to get other updates. I'm Will Ibang. Is bye for now.